Did you know that when you are going through purchasing a home and any type of inquiry on your credit is considered like a ding, like a negative connotation on your credit report? And this is why a lot of people get concerned when they are shopping lenders and things. They usually work with the first lender they talk to because they don't want to ding their credit. They don't want to harm it enough to where maybe you went from excellent credit to good credit, or you went from good credit down to fair credit, or fair down to poor, and you can no longer qualify for the loan that you were looking for in the first place. And so this is why I'm sharing this with you, so that you can kind of calm your fears and understand a little bit more insight to this process. So number one, when you are doing, let's say you talk to 5 different lenders and they're all doing inquiries on your credit, the credit bureaus understand what you're doing, that you're likely just shopping different lenders before you get your mortgage. And so what they're gonna do is, instead of it being like 5 different credit pulls and dings on your credit, they're gonna do it as one. And because it's basically the same thing over and over and over again. So they're just gonna treat it as one pull, one ding on your credit versus 5. And that can really save you when you're like really worried, you're 5 points away from going down to the next tier. That can be really scary. And the second thing I offer to you is, when you are talking to these lenders, ask them, are they doing what's called a soft pull or a hard pull on your credit? Because a soft pull is basically just that. It's really soft. It's just pulling your credit score, maybe a couple other determining factors to kind of get an idea of your credit profile. But they're not doing a full credit pull, which is called a hard pull, which it's hard to do. They're pulling the full credit report, and they're going to look at the last 7 to 10 years, like how many credit cards you have, other loans, have you been late on any of them, how late if you were, everything. They're looking at the whole thing. And a lot of times when you're doing the initial trying to get a pre-approval and just shop different lenders and rates and things, they can do that soft pull to get the information that they need, enough to get you to have an idea of what your rate would be, how much you would need for a down payment, what type of loan programs that you can qualify for, and how much you could qualify for based on your debt to income ratio. And especially if you're like a first time buyer, or if there's any income thresholds that you need to be aware of, if you're doing like a debt or a down payment assistance program. There's a lot of different things that you can talk to these different lenders about when they pull that soft pull. But when you actually go through the process of purchasing a home and the full application is when they can do that hard pull and really see everything. And you do run the risk of they may find something additional that they can't see in that initial pull that may impact your ability to qualify. But usually they can get a basic idea based on that credit score and that soft pull. And then the other thing that I offer to you, if you're just really worried about this, like, hey, Stacy, I just don't know about this. Like, I just want to talk to one lender and just be done with it, whatever rate they give me. I advise you to go talk to a mortgage broker. And what they do is there's a fee for this person. So it's, you have to keep that in mind. It's usually an origination fee or points that you have to pay on top of the loan. And we can talk about that in another video, which is basically part of the closing costs. That what they'll do is they'll do that inquiry for you, but then they will shop the different lenders based on what they see in your credit profile. And they know the different lenders and the mortgage products and what you could qualify for based on that inquiry that they did for you. So you only still have just that one credit pull. But I will say this too, if you do on your own shop those different lenders, try to do that all in the same couple days or week, because the longer you wait, 45 days between pulls, it can be a little bit more challenging for those credit agencies to understand that that's still the same inquiry that you're doing for the same transactions. Try to keep it within the same week or so. I've heard within 14 days, I've heard within 45 days, but I would say just to keep yourself safe is to a week or so. But this is what I advise my buyers when it comes to the budget piece that we talk about during our initial consultation, where we kind of talk through all of this and kind of overcome any myths that they've been hearing, like, oh my gosh, I can't shop rates because of, my credit score will be screwed, and that kind of stuff. This is exactly what we uncover, any pain points that you have. So if you have any questions on this, leave them in the comments. You can also schedule that consultation with me. Just reach out and I'm happy to help. Have a great day, guys. Bye.